All right. So number one, thank y'all for making this happen. I know it was kind of a last minute idea, but the wonder of internet meetings makes everything kind of possible. So Becky, Jim, Trey, Will, thank y'all for coming. Really what I want this to serve as, and hopefully you guys can get as much value out of this as possible, is really give an update on where are we right now, what the different arms of the financial services industry are seeing right now in terms of where are we amid Corona and everything else that's going on in the world. So in the interest of time, we'll go ahead, Becky and Jim from On Q, Trey Bonnet from Palmetto Mortgage, and Will Feemster, Southern First. If y'all are seeing unfamiliar faces at the first, thank y'all for coming. I really, really, really do appreciate it. Becky and Jim, you want to start us off?
Sure. Jim's got the simplified version of this, so I'm going to let him break it down, and so you guys can dig into it and ask questions from there.
Well, we're, as you well know, in somewhat uncharted waters right now, in most anything to do with the financial industry. We've seen lenders raise their minimum credit scores dramatically. We've seen some non-QM lenders totally suspend originations. We've seen some people back off doing govy loans. So there's been a lot of changes in this industry. We've got the feds helping us out on a controlled basis right now, buying the mortgage-backed securities, helping us keep the market flowing. We're going to need that liquidity. What's coming up on the horizon is going to impact us is the forbearance. I mean, could be several $100 billion that the servicers are going to have to hand out on these forbearances, and I'm not sure how that's going to impact it. We've never had that situation before. You know, what's their appetite going to be on the backside after they lay out, you know, 25, 30, 40 million dollars in servicing fees or paying loans to the investors? Because when we go into, I think Mr. Cooper, I read an article a while ago, in forbearances has already approved 80,000 forbearances. So that means these people won't have to make a payment for 6 to 12 months. The interest is still due, but they can't accrue any late fees and things like that. But the investor has to be paid. That means Mr. Cooper is going to start writing checks to the investors to hold those mortgages. We just don't know what kind of impact that's going to have. We've never been down that path before. The mortgage-backed securities are holding their own right now. The treasuries, which is always the dominant driver for rates to compete with that yield on a 10-year treasury, it's down in uncharted waters. I've never thought we'd see it that low. But there's other factors impacting the rates, as I'm sure the other guys will tell you. There's so many things impact rates, you hardly can't watch it. It's just everything.
You don't want to watch it.
and yeah, when a 10-year treasury is basically at net zero, I don't know how to act.
Yeah.
The yields down there pretty low, but the mortgage-backed securities they're holding their own this morning. We may get a small improvement on rates this morning. We don't get rates at 10:30, but the mortgage-backed securities is a little bit better than they were yesterday at this time. So we'll see how that correlates to any improvement in rates. But the feds are helping us out by doing a controlled purchase of mortgage-backed securities like they did in the 2008, 2009 crisis. We don't need another debacle like they did when they dropped $270 million down in 1 week's time. That put the mortgage-backed securities market in a tailspin. But they corrected that pretty quickly. What we're telling people right now is because lenders are adding overlays, some lenders are, like I said, walking away from some products. If you've got a pre-approval that's over 30 days old, get them reapproved again, get it updated, because guidelines aren't changing, but lenders' overlays are changing. FHA is not making changes, it's the overlays from the specific lenders.
Our change just recently went to a minimum score of 620. We were down to 530 at one time.
Right.
On government loans, or FHAs anyway, but now we're 620. Anything that's in our pipeline, we're still closing that's below that, but we are, 620 from this point forward. We're doing credit refreshes within 3 days of closing instead of 10 like we did before. There are a lot of things, moving parts to what's going on that's impacting the risk on our end. And I'm sure Will and Trey will tell you guys the same. Not sure what their levels are because it is lender specific where that's landing, not so much that FHA has governed it.
In my experience, I've been in this a long time. When we have these downturns, we had them back in 92, we had them back in 2000, 2008. We have these downturns like this. The investment community is going to go to the sidelines. They're going to avoid risk. They're going to step back and say, okay, I want the dust to settle. I'm not going to play right now. I'm going to see what's going to happen. I want to avoid the risk. That's why you see everybody raising their minimum credit scores. They want to stay out of those low score buckets. That's going to hurt the first time home buyer market because a lot of those people fall in those buckets. But when this all settles down, it could possibly come back. It's never going to be the same, just like coming out of 208 prices. It's not the same as it was prior to that. And this is also going to have some changes that are not going to go back, revert to where they were previously.
Thank you. Yeah, Trey, what's the world look like from Palmetto Mortgage's perspective?
Well, I appreciate you having me on here. I think that you did a good kind of table on this. I think you got a bank depository. You got me, who's a correspondent, and I believe y'all are direct, if I'm not mistaken. So you kind of got the best of both worlds. So if we can't, we kind of delve in both the direct and the brokering. So we kind of looking at all aspects. But I do agree with a lot of what you said. The market's going to be ever changing, and it's going to change on a daily basis. In fact, I think what was it? Penny Mac just came out with something on Friday or yesterday saying that they're not going to accept any loans for 15 days if they're going into forbearance.
Right.
You are going to see a big problem with forbearance in the market because of all the potential buybacks that are going to happen. So they're going to look at a whole just slew of how this is going to work. I think Freedom actually had 80,000 too the other day, if I'm not mistaken. But that's what's going to cause a big shift in the point spread and how interest rates are going to work until they figure this out. That is why you are seeing a large discrepancy on a lot of rates, is they're trying to get their money up front now instead of waiting for it to get on the back. Because of that, you are going to see some instances of some rates going up and down and a big discrepancy between, like I said, the spreads. I do think that's going to be a big thing in the future. And I do think that forbearance is also going to cause a problem with how they go to sell the house, because they're looking at three types of ways to tack the money back on, because they're not going to forgive it. They're going to either ask for it up front, they're going to tack it on as an extra payment, or the last thing I read is they're going to do a 0% interest loan to the back of the loan, which that's going to kill your equity, really. So a lot of these people may come in underwater at the end of the day. So that's going to be a big issue, I think, for a lot of people. But touching on what y'all were saying with the competitives, I think it's time. Now is the time where it's like we all just need to kind of join forces instead of being competitive, kind of trying to figure out who's got the best situation. And if that means we have to let go of a borrower to send them to another lender because they can make it work because of all the overlays, I think that's I think that's going to be a plus in the situation, because it's going to be it's really going to be turned into a consumer driven thing instead of it being a competitive market. And then that way we can help everybody get into a home, because if I can't do it because of certain overlays, I'm sure Will or Becky can do it because they may not have those overlays, because everything's turning into lender specific. I think our min right now is a 620. We might be able to go lower depending on a certain lender that day, but everybody's changing hourly. So I agree completely wholeheartedly with, if you got somebody who's been pre-approved, they need to go back and look at those overlays and see if anything has happened. But it's going to be a trying time for the next 30 to 60 days until Fannie, Freddie, and Ginnie really get it figured out on how they are going to buy back some of these forbearance loans and things like that.
And what was that you said, like even with lender specific? I know that you and I mentioned the other day, you said there was one particular bank that had raised minimums to 680.
Right.
Yeah, there are a few investors and a few lenders are coming in at a 680 on Govy loans. I do think that Govies are going to struggle a little bit in the near future, but they will eventually turn around, because the bottom line is always going to win. So it just depends on how long it's going to take them to win. So
fair point. Thanks, Trey. All right, Will, what's Southern First's view of the world?
It's ever changing every minute, every day, basically. But no, I mean, I think we're all kind of in the same boat in terms of, I mean, we're every day constantly, we're getting updates from different lenders on additional overlays, or, hey, somebody's, I got something from SunTrust that we do a good bit of jumbo with them, and they're no longer anything new. They're not accepting any locks on jumbo right now. I think it maybe came out this morning or yesterday. I can't remember. So it's ever changing. And it's just trying to keep up with the different overlays, and somebody that was maybe qualified 2 weeks ago, all of a sudden they're not. I mean, there's some lenders that own investment properties, down at the beach that are seasonal. We've got a couple that have come out and said, hey, we're not allowing any rental income from those properties based on the fact that they're not going to be rented for the foreseeable future. And so if you've got somebody that you needed that rental income to qualify for, all of a sudden, qualification could turn into a turn down because you can't use that income. So it's just constantly trying to keep up with the different overlays and changes to make sure you don't step in a hole that you can't get out of. Same thing with self-employed borrowers. We've got lenders that, you're having to do verbal verification within 3 days as opposed to 10 prior to closing. And you've got to get, and we've got some lenders that are saying you have to have proof that business is open. For instance, if it's a dentist office, basically the only dentist offices that are open are for emergency type stuff. So if you've got a dentist in your pipeline and their office is closed, you can't close that loan until they've opened back up. So it's just, it's constantly just trying to stay on top of everything. And rates are what they are. I mean, it's, I think I think they're going to stay similar to where they are now, but I think there's going to be volatility until, like you said, until everybody kind of figures out how Fannie, Freddie, everybody's going to handle, the forbearance and everything that's coming. And until everybody kind of gets a grip on that, it's going to be volatile, maybe from a rate standpoint, but more just from the additional overlays that will continue to come. So
that's a great point. I mean, and I think all three of you speak to the fact of the matter that it sort of is what it is right now, but it's time for us to figure out ways to adapt and still get deals done during a changing market. So, with that being said, I think there's been some very helpful information that's shared. I'm going to open this up to questions for anybody here on the call, and hopefully that can spark some good discussion that we can carry us into the end of the half hour. Okay. So going around, anybody just first, don't all speak at once.
I have one I know we might not be able to answer quite yet. Trey, I know you mentioned the next 30 to 60 days are going to be really tough in trying to figure all this out, but do you guys have any idea yet? I know probably not, of how long we could be seeing trouble from this in the future. Could it be several months? Could it be years? Do we know yet?
I think you're going to have I think they'll figure out a lot of it here in the short term, but I think you're going to see a very long term with the forbearance issue. I think that's what's going to kind of get the market kind of riled up, is how they're going to handle that and what the market's going to do with, if say 5 million people get into forbearance or more.
Thanks, Trey.
And I think to Will's earlier point, the fact of the matter is that while the market might be shifting right now, from the perspective of investors might come out on the other side of this and say, well, wow, I need to diversify my portfolio and I need to dump a bunch of stuff out of stocks and into real estate that's investment in income producing real estate, or vice versa. But also too, you've got people that do currently own vacation rental property that all of a sudden a pretty substantial income stream, not to any fault that their jobs may not necessarily have been interrupted, but the amount of actual income that they can put on a statement is going to be vastly interrupted, because you're talking about not just domestic but foreign travel. Vacation travel is that industry is going to get shaken up in a huge way. So yeah, I mean, that's another humongous thing to consider, is the amount of cash inflow and outflow into and out of people's houses, like, that some people rely on.
Definitely a lot of changes. It's not fun, but I'm thinking that 6 months, just again, because of, you know, everything going on and with the forbearance piece of it. And I don't know that everybody gets that part of it, but with that interest still being out there, because I know it took me a minute to wrap my head around it. It's like, oh my gosh, 6 months, they go back to start making their payments, they're going to owe all that interest. And if you look at a mortgage amortization, think about how much of your payment is interest versus principal. You know, that's not going to be pretty.
Anybody that thought that was a good idea coming right out of college on their student loans knows exactly the situation that we're talking about.
Exactly.
Okay, Keith, you got any questions?
No, I'm good.
Okay. Any other questions, or there's just a couple of other questions I wanted to pose to anybody else, or if there's any other discussion from the rest of the group?
I think the key thing is keep your customers in front of the lender, keep them updated, stay in touch. Don't rely on an old pre-approval letter from 45 to 60 days. Get it updated, because you might be surprised.
And and also on your estimated closing costs, you're going to see some impact, especially in those low govies, because our points that we're having to collect on a government loan right now, FHA and USDA, I mean, it's the spread in rates is so strange. Like, you may be at 5 1/8 with half a point or no points, but then you can get down to 3 1/2 with 1. I mean, there's just a lot of crazy going on with how the pricing is running right now. So staying current with your lender is critical. If you have a listing and you've got a pre-approval letter rolls in on it and it's not dated today or yesterday, you might want to check on it. I mean, I get calls from listing agents all the time, and I'm sure Will, you and Trey do as well. I mean, that's okay to call the listing agent or to call the lender if you're the listing agent, to make sure that what information you have on that pre-approval letter is current before you go under contract.
So right now, I mean, I think that it's funny how everybody's sort of singing the same song, but in a different tune, basically. And it really is right now, communication's key. Yeah. And it's something that, you know, sometimes we're not exactly as good at as we should be, but now maybe it's a good time to build a new habit. You know, in terms of like the most important things that any of y'all from the lender side, from all the other agents that are here on the call, what would be some of the main points to focus on now, especially because like what all three of you have said, all four of you rather, have said, is that, you know, approval odds can change on a daily basis. You know, what are some of the things, if you could give any specific ideas or items to really focus on, especially from the agent side, to really touch on whomever a potential buyer client's finances would be, the main factors that we need to all just be aware of right now, because we got to be minute to minute.
I think one of the parts right now immediately is, do you have borrowers that are on furlough?
Yeah.
And when they're going to go back to work? We're not going to close if I'm on furlough. Okay. So that could impact the closing this very month.
Right.
Yep.
The BMW, you know, you've got the BMW, the MAUs, the, you know, people that work at Macy's. I mean, all these different things. And I'm sure we all have those in our pipeline right now that we're following up with and checking on. Are you back at work? Well, we're going to have to extend your rate. We're going to have to talk to your seller, you know, those kind of things.
I had an airplane pilot that
Yeah.
in the middle, right in the middle, and all of a sudden, you know, he's paid hourly, whatnot, but I mean, he's basically not even working currently. And so, you know, what can you do? I mean, all you can do is wait. So it's
same situation. And the agencies are going to give us some forgiveness for the gap of employment for the people going through those furlough times. But if they're currently in furlough, I'm not going to close it.
Yeah. You know, the good thing is, like you say, you know, you too, Will, you know this, and Trey, but I mean, when they do get back to work, there is absolute forgiveness for that furlough time. Now everybody knows what's going on. So we're not trying to calculate and annualize their income. We're taking out this period of time that we know they were not able to work.
Yep.
So.
I think on our side too, I think one of the things we got to look at is honestly closing costs if you got a Govy guy coming through, because those Govy loans are going to be, or they're going to be tough on the point spread. So we need to kind of help those guys out, because a lot of Govy guys just don't have the money. So the seller paid closing costs are going to be key for this time period.
Right.
I saw one across my desk the other day for a $240,000 purchase. It was $9,000 worth of financing.
I had one negotiate $8,800 closing costs the other day on a USDA. $8,800. I think the price is like right at $200, but I mean that's a lot of money.
Yeah.
Especially for somebody in that price point, because they're just not used to saying, so wait, I actually have to get that cobbled together. So that's a great point. That's a great point you made. Just really specifically being mindful of the government loans more than anything now. Now, like everybody said 6 months, like what do you think would help? What do you think would be the most, what's a silver lining here, I guess, is my question posed to all four of y'all.
Rates are still good.
Yeah.
Hey,
Rates are staying low.
I'm of opinion that we're going to see the forbearance thing. There's not a silver lining with that, because while they're going to issue approvals for 6 months, they can't extend it to 12 months. We could be talking forbearance this time next year, trying to recover from what we've gone through this year. So that's going to have a dramatic impact on our business and your business as well. But right now, I don't see a silver lining other than the agencies are reacting quickly to make modifications in their guidelines to make loans closable. That's one thing I see is the agencies are acting quickly.
Yeah. And I think a lot of the servicers are, I think they're waiting to see if the Fed or somebody's going to step in to assist with all the forbearance, that's going to be coming up. And I think if that does happen, I don't know if it will, I think that will calm the waters a little bit, possibly. So, but right now they're obviously just dealing with the loans and that type of stuff. But I have a feeling those conversations are going on, but don't know if anything will come from it.
Maybe the one thing that we haven't touched on just yet is refis. So in terms of the refi market with rates being lower and people having, significantly more equity in their homes, what are we seeing in terms of troubled waters or a future look for refis right now?
The furlough is still the trouble really on refis, because even on a refi, you still got people losing their jobs. And refis, we're scheduling them out. I don't know about you guys, but we're locking them for like 60 days just because we're trying to keep up with our purchase market. Obviously, purchasers are going to take priority. They're the ones with moving trucks and sell and buy and all the different moving parts. Whereas on a refi, that person's in their house. I mean, so we're trying to be realistic on that and just allowing for time for the processing. So, and getting the appraisals in and not bumping into the purchases. But that's the thing. I mean, like I said, one of my refis is Macy. One of them's BMW. We're hurrying up and closing him before he gets furloughed, because he gets furloughed this weekend and we're going to close him before it happens. So.
What a time.
Go ahead.
No, I was going to say, what a time to be alive, right?
Yeah, I'm waiting to see what they're going to do with refis and the forbearance, because from what I'm reading, they're not going to allow it right now. If you go into forbearance, they're not going to allow you.
Correct.
And they shouldn't.
Yeah.
Yeah.
I mean, if they're not making that payment, I mean, that's kind of like, why would you jump into that?
The thing that scares me about forbearance is the amount of consumers that really don't have a clue what that really means. That at the end of the day, they got to come up with that money to end of the forbearance period. I just don't think they totally understand. It's not forgiveness. It's not going away.
And then even, Y'all probably seen online. You know, they go on forbearing 6 months, and that comes due, or you get modified to be on a payment plan. Well, then you can't refinance out of that while you're in a modification. So I mean, then you're stuck. I mean, it's
like the people that did that South Carolina Hope, they did that loan and they basically had a silent second tacked onto the back when their loan was modified. Sure, they got the better payment that was based on their income and all those good things. It was great and wonderful, but on the back end of it, there's a silent second. They're not just letting that money go. Same idea, like you say, student loans. I mean, and 99% of the people going into it don't have a clue. Like Jim said, they just don't have a clue that it's still going to be out there. It's not going away. The old song, what? Nobody rides for free? Pretty much.
That's a great point. I mean, and you're right. I think it's on us too, as agents on the front line of working with buyers to help people understand, and for us to understand ourselves just exactly what the different loan products available actually mean. You know, you guys do what you do for a living. We do what we do for a living, but it's helpful for us to just grow our knowledge base. And now is as good of a time as any to help teach. So if there's anything that any of you guys want to share with me, and then I can push out to the group, just any sort of FAQs about here's what this product means. I mean, we go through it on a daily basis, but if there's anything you want to share with the group, please feel free to just reach out to me, and then I can push it out to everybody, because, you know, Trey made a great point, and all of you touched on it. It's time to communicate better, right? That's it. Right now, I mean, and yesterday, now, immediately, this second. I promised you guys 30 minutes, and we got 3 to spare. So are there any parting thoughts or any other topics that we want to touch on before I can let you guys get back to the rest of y'all's days?
I think I'm good.
Okay.
Thank you for the opportunity.
Jim, thank you very much. Well, thank y'all so very much for coming on here this morning and making this happen in a short amount of time. And I hope this was helpful for everybody. Y'all stay safe.
Thank you guys.
Thanks. See ya. Take care.
Thank you.